I've never had that happen before.
I've never had that happen before.
Hello, everyone, and welcome to the show. My name is Chris Alaimo.
And I'm Ben Gassaway. Together, we are the Amateur Investors.
This podcast is our open source journal of everything we learn about investing and wealth management.
We're here to explore the key concepts, market dynamics, and investing strategies that will assist you on the path toward financial independence and financial literacy. Our mission is to build us up from amateurs to experts.
All suggestions are our own, and we recommend that you do your own research before taking any investment advice. See you in this week's episode. We hope you enjoy it.
What's up, everybody? Welcome back to another exciting episode of the Amateur Investors podcast. As always, I'm joined with my co-host, Chris Alaimo, and today we are talking about the subject of the Lightning Network. And for folks who are either new to the Bitcoin space or even someone who's been involved for a while, I'm speaking on behalf of myself. I think I've been involved with Bitcoin since like 2016, 2017 with my like chump change of money that I had. But I don't feel like I ever really dove in a meaningful way to understand the Lightning Network until, quite honestly, preparing for this episode. So I hope you folks get a benefit and learn a lot from our podcast, because selfishly, I learn something new every episode. So I hope this is not an exception to that. So Chris, why don't you kick us off and give us a backdrop? Let us know what the Lightning Network is all about.
Yeah, definitely. Before I start off on the Lightning Network, I just want to, I know we did the Bitcoin FUD episode, but of course, today is June 7th, 2021, and there's been two more pieces of FUD that I have to debate. Well, one, Trump was on Fox Business and saying how he does not like Bitcoin and he thinks it's a scam, but then he also said that it's competing against the US dollar. So does that mean that it's a scam and it's competing against the US dollar, which is also a scam? Or he doesn't like it because he thinks it's a scam and it's going to beat the US dollar? So you can't have both ways. And I just think it's, it's very, your American duty to buy Bitcoin now because Trump doesn't like it. It's unpatriotic if you don't do so.
Yeah, and correlation doesn't always imply causality. Just because one condition exists doesn't mean the other. So yes, inherently it's going to compete against the US dollar because they are principally opposites.
Yeah, exactly. So that's one. And then two, the U.S. government that can't seem to do anything right is claiming, that pipeline, the Colonial Pipeline thing where the hackers
the
hacked the
ransomware
pipeline and then they accepted cryptocurrency, and then everyone's going nuts how criminals make cryptocurrency. The regulars like, we should make cryptocurrency illegal because of this. And then Ben Carmen, he's a person I follow from Bitcoin Twitter. He was like, maybe we should make hacking things illegal instead of making the currency illegal, just to show how ridiculous it is.
Isn't that hilarious?
It's like, we should make that illegal. It's like, well, maybe you should make the activity that they do illegal. Oh, wait, it already is, but there's nothing they can do about it.
Yeah, or invest in cybersecurity. It's like that's the thing about the U.S. government or any government really, any authoritarian body, is they tend to miss the root cause analysis. Like airplane security. Okay, you can't bring big toothpaste. When was that a problem? You missed the mark. It's all about just regular screenings. But and the same thing with this Bitcoin. Bitcoin is truly a horrible means to transact value as a criminal, because there is that permanent traceability aspect to it. But the fact that they're trying to outlaw that doesn't solve the problem. They'll just hack you and take Ethereum or Dogecoin next time, and Elon Musk can benefit from that. Sure.
Yeah.
It's ridiculous.
It really is. And also, just to goes to show that the mainstream media is so out of touch, they basically said that the FBI confiscated what sounded like a hard drive that held the keys to the Bitcoin that the hacker stole. So it's like, so did you capture the hackers or did you not? And if you got this hard drive, are these brilliant hackers that hacked the pipeline dumb enough to leave the private keys on a hard drive that you confiscated? Or did you guys think you found a USB and think you have the private keys, and when you go to plug it in, it's going to be empty because those hackers backed up that the private keys to another hardware wallet, which the U.S. government does not have now. So it's like either the FBI just broke the SHA-256 algorithm, which I highly doubt, because they have computers that are trying to break this algorithm, and they have been no success at all. So it seems like this is either made up or they really think they have something that they don't have. That's just my 2 cents on it.
Lesson learned. Not
Yeah.
your keys, not your coins. Whether you're a hacker, a farmer, or Ben and Chris, not
Or
your
the
keys, not your
FBI or
coins.
the United States government or
Yep.
whatever. So yeah, that's just kind of 2 cents. Ben and I unfortunately weren't able to make it to the Bitcoin 21 conference. It looked awesome though. I will say it is on my goals to make it there in 2022. I have been catching up on YouTube I finished day 1 and I'm partly into day 2. So it's exciting stuff. Ben and I might do a reaction episode to that. Anyway, getting back to the Bitcoin Lightning Network. So
Strike me down with some lightning. Let's go.
Strike you down with some lightning. What is the Bitcoin Lightning Network? So basically, it was first proposed in 2015 by Joseph Poon and Thaddeus Dryja. It's been under development since then in 2015. Basically, what it is a second layer to Bitcoin. So Bitcoin main chain is you buy Bitcoin, it transacts across it, it updates the ledger, everyone can see it. It's basically another protocol or layer on top of it. Think about when the internet was being designed, there's all these different layers to it. HTTP, what's the other one? The IP, TLP, or I forget all the different layers of it. But basically, when the internet was designed, you have different websites and browsers and addresses that you can go to that show it. Basically, the Lightning Network is building on top of the Bitcoin blockchain. And basically the purpose was to speed up transactions and to decrease the associated costs with using the Bitcoin main chain. So Ben, do you want to follow up, I guess, basically what the fundamentals of that is?
Yeah, adding to your point about comparing it to the internet, I think this is a really good place to start. And I didn't even put that in my notes. But thinking about it before I kind of dive into what I wanted to add to that is like the nice thing about the Lightning Network, which is still being tested, it's still being developed. You can read the white paper. If you've ever read the Bitcoin white paper, you can read the Lightning Network white paper as well. So that documentation is out. But what's really nice is you can build like applications, platforms on the internet, but no one really owns the internet. The internet is this network effect that hosts a just infinite amount of utilities and use cases and problem solving and applications. But fundamentally, the internet is the foundation. And with the Lightning Network, Bitcoin is the sound money foundation, that the unhackable, unstainable foundation. And Lightning Network is an off-chain sort of experiment to solve some of the problems that are sort of inherent, not necessarily problems, but rather programmatic limitations that Bitcoin really wasn't designed to solve. So Bitcoin, fundamentally, its value proposition is to solve the Byzantine generals problem. And really what that is to achieve consensus across a network of untrusted parties, where I could, let's just say, basically what it's trying to achieve is like, if I, Ben, want to send Chris $10, everyone who's running a full node, let's say it's half of the United States, if I had to send everyone a text saying, hey, do you guys agree that I send Chris $5? It would take forever because knowing some of my friends and myself, it takes forever to have finality, even in a Venmo payment. So Bitcoin, it takes time to have that finality. But what's nice about Lightning Network is it is taking small transactions off chain and allowing small transactions to happen off chain, as opposed to always adding to a block and competing for that space. I have a few things I want to add to that. Chris, is there anything you want to add before I move on?
No, yeah, go ahead.
So again, going back to the Bitcoin, the goal about Bitcoin is to have this decentralized protocol that allows for any user to have access to it. And the size of each block is only 1 megabyte of data. That's the block size. So kind of scaling and comparing against some of the platforms that exist today. Bitcoin on-chain transactions, there's about 3 to 7 transactions per second. You just call them TPS. So 3 to 7 is Bitcoin. PayPal does 150 TPS, and Visa goes from 2,000 to a max cap of 65,000 TPS. Absolutely astronomical comparison. But that's where the Lightning Network benefit comes into play. And Visa or PayPal, you can think about them, they're not really turnkey solutions. In order for those to exist, there has to be a layer below that. And that is the fiat layer that exists today in pretty much every country. So,
and there's also expanding on top of that, there's a layer of trust that you have to do. Like the reason that Visa and MasterCard and PayPal are trusted, I guess you could say distributors of the ledger or ways that they keep the information, is just because their historic track record. But at the same time, I actually tweeted today, PayPal's not your pal. And they've been
that.
blocking people's addresses because of they don't like what they're spending their money on. So, and it's one thing if you're spending your money on nefarious things, but it was like people like hosting Tor servers for people to transact and use the internet privately instead of having Google, Amazon, or Facebook tracking what you're doing. So basically, PayPal was like, hey, we don't like what you're doing. So they shut them off because they get the benefit because they're partnered with Google, Apple, and Amazon. So much so to the point that eBay has been a longtime partner with PayPal. 2 days ago, they announced they are cutting all ties with PayPal for the time being because they don't like what they did with updating their terms of service. Some of their vendors that use eBay to make a living were getting locked out of their accounts and saying, like, you're not allowed to sell these baseball cards, or you're not allowed to sell this, or like locking people's accounts or freezing people's accounts and really hindering small business. Like you're not going to see the effect of Apple or Google or Amazon being affected, but the small retail workers or the small shops, or, they're just the one-off mom and pop shops that are trying to use eBay or other platforms to sell things online.
Yeah. And I think what's really important and what is the value proposition? Like Lightning Network is not just like a quirky thing that exists to make fast transactions. It's not like the next thing where like some of the altcoins like to just, they're the next new thing. It's like, oh, Bitcoin's slow, our cryptocurrency is fast, we've solved the problem. Like, no, that's really not the case. Bitcoin fundamentally, it's a monetary system of policies that it's a scarce supply. It is secured by a decentralized network, and there's like nothing else that compares to that. The network effect is just unbeatable at this point. And in going with the scarcity, block space is scarce, and we talked about the 1 megabyte of Bitcoin size. And the miners, well, really the user of Bitcoin, the network, you have to bid against others to make sure that your transaction is included in a timely manner, which it could be a while. And just the nature of Bitcoin, the verification of each block being mined, it could be 1 block, 2 blocks, which is on average every 10 minutes a block is mined. And the miners care most about being paid. They are incentivized to take the highest fee possible. So the issue that you run into running on-chain transactions, in which, let's say I send Chris a Bitcoin, that is just a direct on-chain transaction that will be included the next available block. That could result in very, very high fees. And the miners are incentivized to seek out those high fees. So for people who are like, oh, I can't buy coffee with my Bitcoin yet. Well, you shouldn't. The taxes make no sense. But at the same time, why would you want to pay a $5 fee for $3 coffee? So backing out of it, how does the Lightning Network work? It works by really what you're doing is you're opening it's called a Lightning channel. And the way that you kind of think about it is, I guess you're open up. It's almost like it's very similar to Venmo, I would say, principally.
Mm-hmm.
I would add, let's say, $10 to my Lightning channel with Chris. Chris has $0 in his channel. I have 10 in my balance. And what happens is when you open up a Lightning channel, fundamentally there will be 2 transactions. One transaction on chain will be opening the channel, and the second will be closing it. And when you close the channel, I just want to kind of fast forward to what happens at the end, because it's important to kind of contextualize what's happening. When you close the channel, all of the balances that have been transacted, where let's say I send Chris $1, so now I have 9, he has 1, all of that will be finalized. You will achieve finality in your balance once that channel is closed. And what's really nice about this is that happens instantaneously. I can send Chris $1 from my balance and he can send it back to me instantaneously. And there's minuscule fees, because the payments are sort of routed either directly or through another person. But the payments the fees are truly micro fees. So what's really nice about this Lightning Network is you're sort of existing in a private ledger with another party. So it's a Ben and Chris Lightning channel. We fill up our balance and we just exchange. We're not worrying about adding anything to the ledger. We don't have to worry about on-chain fees, and we don't have to worry about really any time delays. So it's similar. I think Chris maybe add to this a little bit. You go to a bar and you open up a tab. You can think about opening a tab at a bar like you have opened up a Lightning channel with that bar. You continue to go back to the bar. Hey, I want another gin and tonic. I like gin and tonics. So once I've gotten to 4 and I've reached my limit, I say, hey, I'm done. I'm going to close my tab. I'm not paying for every single drink, signing the check, signing the tip, every single time if I have a tab open. I only pay the final payment once I'm done and leave the bar. That's how you can think about, I open up a tab, that's opening the Lightning channel. That's the first transaction on chain. Closing the bar tab, closing the Lightning channel. That's the second and final transaction on chain. So I'll leave it at that for now. Chris, feel free to jump in.
Yeah, definitely. So this really starts to get interesting. Obviously in a peer-to-peer sense, Ben and I are business partners with the amateur investors. So opening up a channel between Ben and I makes a lot of sense. I buy something for the company or he buys something for the company. Hey, dude, I'll settle up with you. I send you some sats and vice versa. It starts to get really interesting though when you open up channels with other people that aren't connected. So perfect example, if Ben opens up a channel with me and we have our channel, but then he wants to pay my brother, he could send me sats. And then since I have a channel open with my brother, I can route the payment to my brother while taking a small fee of sats to do that. Much cheaper than doing an on-chain transaction from Ben to my brother. He could go route through me to my brother. And I actually have a diagram that I could pull up that I found online that was pretty helpful.
Yeah, go ahead and pull that up.
Can you see it?
Yep.
Yeah, so this is the Bitcoin Lightning Network, and it's showing, for those that are listening to the podcast, it shows Alice pays 0.01 Bitcoin to Bob, and then Bob pays Carol because they have a channel open, and then Carol pays Dave. So Alice paid Dave through 2 other people, and at the same time, Bob and Carol took small transactions to do so. So obviously, she was sending it to Bob. Bob has now a balance, and then he routes that over to Carol, and then Carol routes it over. And it's basically the same thing. Alice has to pay a little bit of a fee going Alice to Bob to Carol to Dave. But at the same time, it's just very interesting, and it's immediate clearance. Like if you were to do a Lightning Network payment, I think it takes fractions of a second.
Yeah.
It's really cool, too. I don't know if we've talked about Jack Mallers before. He is the CEO of Strike, and he was at the Bitcoin conference. Basically, what he's doing is he's using the Lightning Network to basically put Western Union out of business. Western Union is the bank that allows bank transfers from one country to another across currencies. So not only do they get a huge cut, normally like $30 or $35 per transaction that you do, they also take a fee for converting the currency. So perfect example, if I wanted to send money to my family in Italy, I would go to Western Union and I'd send them US dollars over to my cousins in Italy. It would go through Western Union. Western Union would take like a 30 or anywhere from like a $15 to $35 cut just to do that. Then there's another transaction fee to go from USD to euros in the Italian currency, euros, and then send the USD to euros to a bank in Italy. They have to go and pick it up. And then sometimes there's even like a receiving fee on their end that they have to pay to do a final transaction into their account. Not always, but it can be. Where on the Lightning Network, it's basically free. So Jack has a developer that was in Ireland, and the video was incredible. It's a 50-second video.
It's crazy.
He's a programmer in Ireland that works for him. He sent US dollars over the Lightning Network, so it went from USD to Satoshis over the network to his buddy, and then back into the Irish, the euro. Yeah, he was in euros. So dollars to Satoshi across the Lightning Network to his programmer, and then back down into currency at a fraction, literally pennies. I think it was 6 cents to do the $5 transaction. It was absurd, and he saved so much money, and that was his vision for the world. Because a lot of times Western Union, it's not as big of a deal for Ben and I. I'm not sending money to my family in other countries, but if you are an immigrant to this country and you were fortunate enough to come here legally or even illegally, and then use the banking system to try and send money back to your family in your home country to help bring them out of poverty, you're getting destroyed by Western Union's making a ton of money off the sweat and labor that you've put forward. So this is really like final settlement at the cheapest fees possible. And not only that, it's in a currency that's not hyperinflating away. Imagine sending US dollars back into your currency in Venezuela that's hyperinflating at anywhere from 40 to 50% a year. It's almost not worth it at that point. So Bitcoin, you could send them Satoshis or Bitcoin, and they could hold it and enjoy the price appreciation of Bitcoin, or hold it as an asset for the long-term growth. And that's just kind of the cool thing about it.
And just a refresher for our listeners or viewers, Satoshi is literally just a unit of denomination in Bitcoin. It's just a much more user-friendly unit. They're synonymous. So a Satoshi is the smallest denominated unit. It is 100 millionth of a Bitcoin, and that it's a SAT. So just so we're on the same page here. Bitcoin definitely. is a SAT is a Bitcoin. So what a caveat of the Strike piece, which is it's leveraging the Lightning Network, but it's not like a naked Lightning Network channel. They're what Jack Mallers is doing is using is Bitcoin is sort of the intermediary as opposed to using a Western Union. Mm-hmm. So instantaneously he's converting US dollars to Bitcoin back to the euro. So you never even, so for folks who are like, oh, well, what happens if Bitcoin's moving around? It literally doesn't matter the price of Bitcoin whatsoever. What's beautiful about it is Bitcoin is a decentralized network that's not going to steal fees like a Western Union and just take a flat fee off of any transaction size. It is a globally decentralized, natively digital asset that you can just final settlement on the Lightning Network, but using fiat to transact. So it's a little funky, but the Bitcoin is really just the medium of exchange, truly, of conversion. It's really a beautiful thing.
Yeah, and expanding on that one last little bit. So Jack was at the Bitcoin conference, obviously pretty beloved by Bitcoiners in the community for everything he's doing for, the impoverished countries and the people that are kind of like the unbanked or the people that are just struggling with, building wealth or accumulating wealth because of their country's government or monetary policies, basically. So he was down in El Salvador a couple months ago, and he was there's a place called the Bitcoin Beach, which is basically just an open market of vendors, farmers and alike selling goods and services. And a lot of them are using Bitcoin to transact and to have that economy run instead of in the El Salvador currency. Well, recently they have a new president, and he announced at the Bitcoin conference, there was a clip of it, that he is going to make El Salvador accept Bitcoin as legal tender, and actually you can pay taxes and all that. And he's announcing it as their currency for their country. What that really means, I mean, that's huge news. I worry that the United States dollar or the United States might try and antagonize El Salvador because they're essentially leaving not only their currency, but they're leaving the US dollar. And the less that other countries want to use the US dollar, it loses strength as a global reserve currency. So I hope not in the coming months or year, we see that we are raiding or invading El Salvador. I won't get into the geopolitical of it, but they do owe US dollar debt. But in theory, they could hold Bitcoin and then either leverage off of it or find ways to pay the US dollar debt that they have to the US back, essentially bring it to zero. But really, really cool. And in doing so, if he's proposing it to Congress this week or next week, a lot of it is similar to his political affiliation, and they think it's going to clear in their equivalent of Congress down there. And if so, Bitcoin goes from not just a crypto asset or cryptocurrency, but defined as basically an asset like property. It would go as a foreign currency, meaning that it no longer would have a capital gains tax associated with it. Most likely the US would have to change it as they're not going to have a capital gains tax, because there's not a capital gains tax when you convert your dollars into euros or yuan or whatever currency you're saying. If this country is saying this is our currency, that means that it would all of a sudden drop the capital gains on Bitcoin, which in theory would bring the price appreciation up a lot, because you no longer have this fee of property of anywhere from like 20% all the way up to 29% as selling it. So in theory, it could make it go up in value. Obviously,
it opens up a ton of opportunity, truly. And this is something I want to talk about, is just like the friction of costs, and like just to establish some context around that. And if you wanted to add, just jump me after this. I wanted to note that you had mentioned like the converting of US dollar to a foreign currency. Just to give folks scale of, we talked about the Western Union taking a cut of the foreign exchange fee. Per day, this is per day, and I want to emphasize this is per day. $6.6 trillion of volume is transacted in the foreign exchange market. $6.6 trillion per day is transacted. And just to make sure that people understand what that means, all that foreign exchange fees are inefficiencies. That's it.
Yeah.
That's it. There is no benefit. There's no production. There's no value. It is simple inefficiencies in which the banks make money off of someone trying to live their life in a global society. $6.6 trillion.
And it's a lot of money. And the only ones that are benefiting are the Western
It's the
unions,
banks.
are the banks. They're the only ones that get the benefit of those transaction fees. Basically, they're moving money from one account to another account in another currency, and they take a huge cut. 6.6 trillion is nothing to scoff at.
Per day. So
Yeah.
per day. And that's
day.
in 2019, the stat that I got. And so I think a lot of folks that I was listening to a ton of Bitcoin podcasts before this, but I don't think people give it enough justice of how much value the Lightning Network truly can bring in. I don't think they focus on truly what that solves. I know that it's a Bitcoin native solution is eliminating the need for foreign exchange, like fees and just having foreign currencies or just having a plethora of currencies. You have one, it's Bitcoin. That amount of inefficiencies is totally solved by the Lightning Network if you tack it onto Bitcoin. Like the Lightning nodes are fully incentivized to, it's competitive. You are incentivized to provide the lowest fee, and the Lightning nodes who are routing, like you said, Chris, if I wanted to send money to your brother, but I don't have a direct channel with your brother, I can route it through you, but you take let's say I send him your brother $5. You can take a 1 penny cut off of that. So I give you $5 and 1 penny. You take the 1 penny and you send it to your brother. That's all broadcasted. Those fees are all publicly available. It really is essentially a contract to a degree. But this is all happening instantaneously. And Lightning nodes are people essentially with their hardware, but they're incentivized to provide the lowest fee because it's a fully open and free market to provide the lowest cost of service. It truly is incentivizing the lowest fee. So not only are you eliminating the friction of an international sort of like foreign like currency switching, you are able to route payments instantaneously anywhere around the world instantly. I think that's incredible.
It is. It's incredible to say the least.
Want to talk security?
Yeah. Do you want to talk security, and then I'll do kind of the final wrap up?
Please, let's do it. So, is the Lightning Network secure? Absolutely. It still needs to be tested. I mean, it's still under development, and it probably will always be under development, much like a Visa and MasterCard are always developing. That's why their share price goes up. They're continuing to do more within existing solutions. The Lightning Network is secure, but the same risks scale up and down with on-chain transactions that, taking custody of your Bitcoin is absolutely paramount to what it means to be a Bitcoin owner, not your keys, not your coins. Same thing with the Lightning Network. When you're opening a balance and a channel with someone, you take in that inherent risk depending on how you custody those coins. So the same risks apply to Bitcoin that apply to Lightning Network, just on a smaller scale, it tends to be. So some of the features that really disincentivize bad actors and incentivize good behavior, one of them specifically, I think is a simple but elegant solution. It's called asymmetric revocation commitments, but another way to think about it is one party or sole option channel closures. And really what this is designed to do, these asymmetric revocation commitments, they're a way to punish users who try to cheat the system and take their share of a wallet at any time that suits them. Like, let's say Chris and we have our Lightning Network and we open our channel. I send Chris $2. He owes me $1 worth of Bitcoin, but he runs off, closes the channel, says he gave it to me, didn't. We never signed the agreement. That's not possible. What happens is the asymmetric revocation commitments, they set conditions that if the cheated user was essentially just if they were cheated. So if one user was cheated by the other counterparty, they have the right to claim the full balance of the wallet, regardless of what transactions transpired. So the risks of taking some nominal balance is totally disincentivized by this like all or nothing cost. And essentially what's also built into sort of like Lightning Network smart contracts in a default sense is to mitigate the risk of some counterparty holding your funds hostage. That sole option channel closer, let's say Chris doesn't want to send me $1 or $2, and I've had it. Chris is I've had it with him. I just say, hey, I'm closing the channel. And what's really nice about the Lightning Network is we have our private ledger. So Chris we could have made thousands of transactions. I bought him a pizza, he bought me a beer. All those transactions are sort of balanced. It's, if you've ever used Splitwise, it's kind of like that. So whatever the balance is, according to the ledger, our private ledger, that is closed, and then that is broadcasted and included on chain. So what happens next, because that's the second and last transaction on chain, miners then verify those transactions, and then the funds are dispersed appropriately. So regardless of what's happening, it truly, it can be between friends, it can be between people you don't trust, but I'm talking a point 1 to point 2. If I don't like what person 2 is doing, I could just close it and we get whatever money we're owed respectively. I guess another feature that I'll talk about, and truly this is pretty technical and it's above my pay grade by a long shot. So like folks definitely like take a look at these topics and do your own research. But one thing that is really critical is a hash time lock contract, an HTLC. If you've ever, researched Bitcoin or Ethereum, you've probably heard about a smart contract. It's like sort of it's really just a programmed contract from a legal sense to a degree, but it's programmatic, it's instantaneous. And it's a combination of two things, a hash lock and a time lock. The hash lock is essentially a condition that's placed on a transaction that basically dictates how those funds are spent by proving that you know a secret. It's similar to knowing like a private key. So the sender will hash a piece of data, include the hash in the transaction to the receiver. And the only way that the receiver can spend it is if they prove that original data, the secret, matches the hash. And the only way to provide that data is if the sender gives it back to them. So lastly, time lock. This is another condition that's very much about like conditionality. These conditions prevent you from spending funds before a certain time. So it's really like a time lag to prevent you sort of like from dining and dashing kind of to a degree. It's either specified as an actual time or a specified block height. And it can be used to set an upper limit on how long a payment channel remains open. So this essentially stops a certain user from disappearing, and then the balance is sort of forever locked in the channel. So let's say Chris and I, we're only going to work together for another 2 days. We open the channel for 2 days, and then forever he doesn't have to see me again. So that's kind of the benefit of the time lock, and that's the HTLC. Chris, that's my ramble. My mouth is dry. Go ahead.
Yeah, no problem. Thanks, Ben. That's some really good stuff on the security features. I think the last thing that I want to bring up is that the Lightning Network really helps banking the unbanked. And obviously Bitcoin helps do that, but this is kind of even further. So currently in the world, there's 1.7 billion people that are outside the banking system for one reason or another, whether it's the country they live in, whether it's an authoritarian government, whether it is just poverty itself. Of that 1.7 billion, though, 1.1 billion of that 1.7 fortunately have smartphones, or at least a phone that can connect to the internet. In combination with Bitcoin, you can use this and Lightning networks to help preserve their wealth. So obviously, they can make small Lightning network channels between them, their family, and their communities, and then also get the price appreciation of Bitcoin as it moves up. Yes, it's very volatile, but I think Jack Mallers said it the best. If you're a billionaire and you own Bitcoin, or you live in Venezuela and you own Bitcoin, and the price goes up, you both get the benefits of that. And I think that's really important. Obviously, it's super fast and low fees, so you're basically taking out the Western unions that are stealing their wealth, and you're removing counterparty risk of fiat currencies. The dollar since 1971, I hate saying this, but it's depreciated it's lost 99% of its value since 1971. It's like, yeah, buying power, 99.9% of its buying power since 1971. It's like, everyone always hates saying, oh, 99.9, but it's true. And it's sad. It's just the way that our monetary policy's been, and we're kind of on this fiat experiment since 71. It's only been just celebrated 50 years, or it's coming up on 50 years of the fiat currency, but we've seen a few other times in history it always fails. Ours is kind of the longest one ever because we've had these derivative markets, whether it's, in stocks and bonds or all these other different, derivatives on top of derivatives. But yeah, it's unraveling very quickly. I mean, we're looking at how much money we're printing overall. And I just think Lightning Network's just kind of one of the applications built on Bitcoin, exactly like Ben and I were mentioning earlier. It's like another layer on top of the internet. And I just think it's so important. I think it really helps impoverished countries and just people that are outside the banking system. And I kind of see this as the way going forward. I know that's why Ben and I have been talking about Bitcoin so much. It's really cool. I've been enjoyed it the whole time. And I hope you guys liked that episode. Ben, you got anything else to add?
Yeah, no, I think you said it really, really well. Like that was honestly well said.
Thank you.
And I think it's just a critical and like sort of inevitable development. I mean, a digital sort of global currency at the end of the day, I think is inevitable. And whether it's a sort of 1-to-0 waterfall where like, the dollar just falls apart, it may not happen that way. But at the end of the day, like folks, when you like look at your savings account, you're making 0.03% and the CPI inflation is 4.3%, all you're doing is losing money. And human beings deserve the right to preserve wealth and be able to like live within their means, whatever that looks like. But you should be able to save your money and not feel like you have to go deploy it somewhere and take on risk. Like money at the end of the day should be the least risky asset. And like Chris said, what did you say, 1871 or
1971 when we came off the gold standard.
It lost that much value. Wow. So
Yeah.
losing that much of your buying power in a matter of decades is a disgusting thing. Like, sure, the dollar's not
Actually,
volatile.
I guess maybe I was wrong. Maybe it's 1913 of when
that sounds more right.
1913
1971 was when we left the gold standard.
when we left the gold standard, which it still lost like 80% of its value, or
probably
86 or something like that. But yeah, 1913, it's lost 99% of its value.
Money principally should be the most liquid and the most easily tradable asset on the face of the earth. And right now, money is not. It may not be volatile. Like people always like, oh, Bitcoin's so volatile. Okay, well, the US dollar is not volatile, but it is consistently losing value. And I can't stress that enough. So I would much prefer being in a network that is fully decentralized, is designed to have no inflation. Inflation is a problem. And the Lightning Network is just an answer to some of the limitations of the most sound money that's ever existed. So if you want to compare Bitcoin to Dogecoin, you're totally missing the mark, and you should do a little bit more research and understand why sound money is so important and why your savings account has only made it harder to buy the things you want. And it's something to always think about is where is my money and what is the cost of doing what I'm doing with it? Yeah, I'm excited about the Lightning Network.
Me too. And Bitcoin, I see it as, it's kind of funny. It's like one of those things where it's like global money is a good thing with a condition. Like Bitcoin's the best global money because it's fair. It was, Satoshi Nakamoto published it and then started the network 3 months later. There was no pre-mine like Ethereum or any of these other cryptocurrencies. It's not controlled by any of these other things. It's not like the Federal Reserve that someone can just print up more of it, or Tether or any of these other stable coins. If there was a global money that wasn't Bitcoin, or at least not fully decentralized in the way that Bitcoin is, it's more 1984 George Orwellian nightmare of, they have the power of the money. And that's basically what the US dollar or any fiat currency is right now, or any other cryptocurrency that's not Bitcoin. Not saying there won't be another one that comes along. I don't know to speculate. I just see Bitcoin right now in the way that it's so decentralized, and it is the best and the only one right now. Because of its true decentralized nature, and it's always trying to improve its privacy and, keeping your wealth your own. And there's no one that can change the rules unless it's a consensus from the majority and everyone else. And don't get me wrong, Silicon Valley tried to attack it. I still want to read the block size war about 2017, 2018 timeframe, where a lot of the top 50 cryptocurrencies at the time, crypto companies and even tech companies were trying to change Bitcoin to make it into what they wanted. And thank God Bitcoin won. The network and the protocol won and beat a lot of money, a lot of power, and a lot of backdoor meetings that were trying to change it for what they wanted. And, I only hope we can keep fighting this fight and keep Bitcoin the way that it is and keep improving on it and make it a better and most peaceful way to transition to a global money that's not controlled by anyone. It's controlled by everyone.
Yeah. And we can wrap up, but that's the beauty of Bitcoin is we don't need Elon Musk. We don't even need a Michael Saylor. It is a truly free and open market where the market will choose what it prefers, and Bitcoin will stay there forever. It doesn't matter. The price may move, but Bitcoin will stay and it will remain what it is. And at the end of the day, Bitcoin is allowing folks to have financial independence. And people disregard that influence of inflation and the Federal Reserve to just take away your wealth through inflation with the stroke of a key. My dog's barking. He hates the US dollar, I guess. It's paramount to take financial responsibility, and Bitcoin gives you that first platform to do so. So I'm excited to see what the Lightning Network comes to be. I definitely take a look at Strike, definitely take a look at Fold as well. Chris, thank you for introducing that to me. That's an incredible app. So I hope you guys enjoyed this episode.
Yeah, definitely. You can also check out Lolly as well to get off zero and get some sats. As always, check out our website, check out our social media channels. Ben and I have a big announcement coming June 15th. We're not quite ready to unveil it yet, but we've got a couple big announcements coming June 15th. And we're really excited for it. Thanks for listening as always, and we'll catch you later. Have a good one.
See you guys.